What's up traders, Cam for Investors Underground. Super excited to be able to share this 20-minute clip with you today. It outlines one of around 50 live trades that make up Nate's newest DVD, Tandem Trader. Nate's first DVD, Textbook Trading, was by every measure a huge success. We've seen traders in our community really excel and making profits hand over fist, and it currently resides as the #1 product on the whole of Investimonials out of over 10,000 trading products and services. So why did we make a new DVD? Well, as part of the process of making the first DVD, I spent some time in Nate's office watching him trade just to make sure it was, a comprehensive product. But as I was standing there watching tick for tick, trade for trade, getting to see Nate click the buttons and scale in, scale out, execute his trades, I just knew that that was something that we had to deliver to all of our members because I knew how much value it would bring to them. So for the next couple of weeks, I sat down and thought about, hey, how can I make this happen? Were we going to strap a GoPro to Nate's head? But we devised a way to be able to share the key concepts of one whole year of Nate's trading in this 14-hour DVD where we've gone and condensed 2 or 3 hour trades into the 15-minute highlights, tick for tick, with Nate's director's cut style commentary over the top. I can comfortably say that watching this DVD is as good as, if not better, than standing in the office watching Nate trade for a whole year. I put a link in the description of this video for you guys to be able to access discounted pricing if you want to go ahead and buy the Tandem Trader DVD. If you have any questions about it, you can drop me an email, cam@investorsunderground.com. I made a promise to Nate that this would be the new #1 product on Investimonials. So we've really stepped up to the plate and we're delivering what I think is a totally game-changing, never done before trading product that will bring more value to traders than anything else on the market. Anyway, I'm going to stop jabbering. Let's go to some action now. So in this chapter, we're going to be covering NASDAQ textbook longs. A long trade simply means the objective is to buy low and sell high. And there are a couple of different chart patterns that Nate likes to look for when he's looking to buy into a stock. The first we're going to discuss is the ABCD setup. And this is really a great trade for a beginner or an intermediate trader as it's got a set risk. They're very easy to identify. There's no need to search for borrows or have a broker with extensive borrows. And the market's been hot for the last couple of years, so these patterns seem to be really working well. And even when the market's cold, the ABCD pattern works great for a bottom feeding kind of trade in terms of longing a trade that's perking off the bottom. And it's got a positively geared reward to risk ratio built into it. So it really is a great setup to have in your trading tool belt. With all that being said, Nate has much better intuition on the short side than he does on the long side. So we had to search through quite a lot of data to put together this chapter of the DVD for you guys. But I personally know a lot of guys in the Investors Underground community that make great money off the ABCD pattern. We put together a comprehensive chapter that explores all of these NASDAQ textbook longs, and we're about to dive into the action now. So basically the ABC trade is built around the ways that stocks move upward. And a lot of people say, hey, buy the dip or buy the breakout, but without the right approach to risk and making sure you get paid out the right reward for it, that advice is only half true. So for example, let's call this blue line a large upward move. You don't want to chase this and buy it long here because you don't know where the pullback's going to be and you don't really have a defined risk to base the trade off. So what we found in our experience is there's a better way of getting long on a stock that's trending higher without risking as much and also getting more of a confirmation that the stock actually does want to move higher rather than chasing something that's already running upward. So right now, as I said, you're looking at that large morning move, but what we're going to be looking for is some kind of pullback that's going to get our attention. We're going to start monitoring this and essentially looking for a scenario where there is a higher low that might suggest to us that this stock isn't going to go and give back all of its push, and it might spend some time at a slightly higher price point and set up for the next piece of this trade. So we're not really ready to buy this yet because we don't know where the bottom of this pullback is going to be. We still want to find that defined risk that we know we're going to be getting paid out on. So now let's say the chart has made a higher low, but at the same time, it's also sort of made a lower high. So we're still not entirely ready to buy this. You might consider starting in with a partial position if the daily chart is really set up. But if, let's say, this initial move upward was a very large move, there could be shorts looking at this, saying that this is actually a lower high and it's going to retrace some of those gains. And that can be one of the reasons that the ABCD pattern gets propelled if it does make an up move. I'll discuss a little bit more about that in a moment, but from a long perspective, this chart has now made a higher low. It's already on people's radars because it's made a nice big move. Predominantly in the morning, those kind of big moves happen. And right now, what you're looking at is the textbook ABC part of the ABCD pattern. And you've got A, which is the push. You've got B, which is the subsequent pullback. The chart's showing that it's making higher lows. So as it perks off this level here, I'd consider that C, and you're looking to buy anywhere within this box or even slightly above it with your risk on B. And for the more novice traders, you might like to set a hard stop under B. Nate doesn't use hard stops because he likes to leave a little bit of wiggle room. If someone goes and hits a bid and it takes a quick spike to the downside and comes right back up, he doesn't like to get stopped out in those scenarios. But basically what you're looking for is to risk down on B. If you're getting paid out the proper reward on the risk to B and the chart starts to top out at that A area, you can actually consider locking half as long as the reward was relevant to the risk that you put. However, the real idea of the ABCD trade is to have it break that previous high of A. And often when it does, it's pushing onto the high of the day list. It's going to get on people's radars and they'll cause the move from that previous high of the day up towards that D level. So a lot of the time you can be getting paid out between 2 to 1 on your risk up to, 4 or 5 to 1, which is a really ideal circumstance. The thing that really excites me about being able to go over this stuff with you is that the ABCD pattern doesn't look perfect every time. There are variations to the way that this is going to manifest visually on your charts. And by going through 10 or so examples of this pattern, you're going to understand those variations and be able to start identifying it for yourself. Let's go to Nate with the live action.
BBRY should look very familiar to a lot of people. We actually had an example of this on the first DVD for that week open washout, potentially a beat chart, and then that next morning you hope for a really weak open for it to wash out and then either nail it into the washout or add as there's higher lows, and then you can use the low of days as your risk. Keep in mind that this prior close was around 11 bucks or so. And then it was down all the way down to the 10 mark. So knowing what you know, when a stock is down 10%, it's going to have the SSR on, or the short sell restriction. So all that means, it doesn't mean that you can't short it, it just means that you can't short the bid. You have to short into an uptick, which means you have to short onto the offer. So with that said, as a trader, you want to be buying into the washouts themselves. And this is not a trade for a lot of new traders, as you could end up in a pretty bad position if you're unfamiliar with how to react. What you can see here is I write in the chat room, BBRY, week open so far. I want to wash out in 950s over and under as the risk when I'm buying that wash. So know that when you see me buying, although it may look random, I'm buying with a plan in mind. I'm buying into that wash, into the panic, basically going on the other side of the trade, anticipating where, had I been long, where I might be panicking out. And as a trader, that's where I want to get long. I want to get long where people are freaking out. And with that, you need to have that idea in mind. And when you're buying these washouts, it's not a beginner type of play. It's something that you're anticipating the move. And with that comes an unknown risk. It could potentially fade and wash out to 950s and then go to 9. So you need to build that into your risk. You need to watch your sizes on that way down before it hits a bottom and starts to trend in the direction that you anticipated. Many times the most emotion is right at the open. So I went ahead and just started in a tiny bit. Again, remember, I'm sizing in based on the idea that this could very easily go to 950, and I'm okay with that. Starts to hit 970 a couple times, 970, 970, 970, 971, 970, 971, 970. So I went ahead and added a little bit more into those 970s on the bid. Again, remember, I'm anticipating it because the short sell restriction is on. So everybody that wants to short it can't short on the bid. And when it does reverse, it's going to reverse very, very quickly. Again, reminding the chat room, understand the plan, because although I'm buying, I have a bigger picture idea in mind. As you can see, ramps right back up. And that's why you have to anticipate when it's a short sell restriction. I went ahead and locked in some of the BlackBerry because it had a nice big push and then it just jumped up towards that 10. So I want to take advantage of everybody thinking that 10's coming and go ahead and lighten up a little bit. Give myself a little bit of breathing room. Now that the market has been open for a little bit, about half an hour or so, things have started to tame a little bit. And now I can use the low of days as a guide. So now basically all dips I'm interested in buying into those washouts with a risk based on the low of day. So once again, I'm going to be locking into all pops and trading around a position considering the size that I have. But remember, the goal with this is to buy all washouts. Use this 970 as a mental risk in the back of your mind as that risk at hand. went ahead and sized down into that 10 break again. You can see the ABCD type setup here, curling up with that top at 990s. When it starts to break higher, you've got not only the volume, you've got the red to green move plus the 10 magnet. And remember, the more things that you can couple, an ABCD move, a red to green move, a whole number break, the more things that you can put together, the more powerful of a breakout you're going to have. And that's exactly what we had here. It was the ABCD type breakout, that 990 break for the 10 magnet plus red to green. And here we are at 1020 is the high of days. And I'm out of shares because I like to take profits along the way. And many times my patience runs dry. Again, taking a look back at the 2-minute chart without all the tickers moving around and whatnot, you can see anticipating the washout. Remember the daily chart was very beat. It's got the short sell restriction on. We want to buy into the washouts. Some of you may not have bought into that washout, which I would not suggest for new members. So you see this big move. It pulls back. Now you can buy all dips with a risk on this 970 level. That's exactly what we did, anticipating that 10 break and sold into that rush through the 10. And as far as the late day fade, you can see lower highs, lower highs, lower highs, and tying in with that whole basketball concept where it's bouncing off this base here at 1010. And then it finally washes out. And you can see by this line, now the support becomes the resistance. And then slow fade from there.